right, spenders and savers, welcome to another edition of Talk Me Out of Debt in Traffic Edition. This is the podcast where I talk to you about financial principles and money topics and helpful information about money, as I'm a financial coach since 2017, and I'm going to do it all while I'm in traffic. So, here we go. Today's topic, let's call this episode 2. Thanks for joining us today, by the way. And today's topic is going to be credit cards, and mainly the credit score. And hot take, why you don't need a credit score. So, let's see, where can we start? It's the Christmas season. It's December 17th right now, so everybody's doing some Christmas shopping. And unfortunately, I have a feeling everybody's using credit cards, or a lot of people are, because research shows that 7 out of 10 people do not use a budget. They do not make a budget. Therefore, I know hardly anybody has any money saved, especially for Christmas spending. Mainly, they don't have any money for everyday emergencies. So, not to bum you out, but I would avoid using credit cards. And I do have this thing that I sell. It's called the Birthday Savings Binder. It's actually a really cool thing to help you prep for Christmas time. So what it is, it's a binder that has about 9 baseball card sleeves inside of it. And what you do with that is, as you gain extra money throughout the year, a bonus or a refund or something, you just find some money over time, whatever, you can put cash into these binder sleeves, into the baseball card sleeves. And the binder also comes with name cards. It comes with about 50 name cards. So you can get these name cards, put them in the binder, and you can make it out to Uncle Leo, or you can make the name card out to Aunt Susie, something like that. And then you can put money into these placeholders, and throughout the year you can set aside money, tax refund and stuff like that. You can set aside money for all these people throughout the year, so it's not a problem at the end of the year. You just do it throughout the year. It makes it easier. You can set aside $20, $30, stuff like that, and just makes your life easier. But that's called the Birthday Savings Binder, and you can find that at BecomeDebtZero.com, or you can find that on Shopify.com/BecomeDebtZero. And so back to credit cards. So yes, let's just talk about random credit card stuff today. If you have questions about credit cards, feel free to leave a comment in the comment section, or a question in the comment section, or you can send me an email at BecomeDebtZero@gmail.com. Make the subject line "Talk Me Out of Debt." But anyway, so credit cards, there's a bunch of different kinds out there. A lot of people are moving away from credit cards. People are using things like Klarna, and there's other types of things like that where it's like you spread your payment into 4 different payments. Please don't use those either. There's things like, well, let's just stay on the topic of credit cards. So I think the average credit card today, the interest rate is about somewhere between 25 to 30%, which is crazy. And a credit card sounds like a good idea. It's, I'll only use it if there's an emergency, but it's very easy to rationalize an emergency in your head. Oh, we don't have any money for, or let's say, I don't want to cook tonight. Well, we have a credit card, so let's go out to eat. And the next thing, you're buying steak and going to the movies or something on your credit cards, which is what I did many years ago when I was in my 20s. So that turned out bad for me. But since then, I got myself out of debt, and I haven't used credit cards since. I hate credit cards. So what I've done now is I have, instead of using credit cards, I just built up a savings account. You start with $1,000, and that's your, so it's like I'm going to do a Candace Owens phrase here. I'm going to borrow my own money from myself. She pronounces buried, which I think is funny. But I'm going to borrow my money from myself, and then instead of borrowing it from a credit card. So with credit cards, say if you use a credit card to, let's say, buy a Christmas gift with. Well, and most people, I think you spend 10% more when you use a credit card than when you actually use just cash. There was a study done about that, especially with vending machines. Swipe your credit card, and you're not even looking at the money or the price. You're probably going to buy a bunch of stuff in the vending machine. If you only had cash, well, you're limited to what you can buy because of how much cash you have. But anyways, so with credit cards, a lot of people try to use them as, well, I'm only going to use them for emergencies. But if you have a savings account that's dedicated to emergencies, well, there you go. You don't have to get a credit card. Somebody make a count of how many times I say credit card in this episode. Anyways, where were we? So there's a bunch of different kinds. Oh, and then some have cashback bonuses, but it's not really, a lot of them aren't even cashback. Some of them are cashback, but some of them do this thing where you get points, and then you have to start doing toilet paper math, and you're like, all right, so if I spend $100 going out to eat, then I get 1.5 for every dollar I spend. And so, wait a second, what does that mean? But I can only use them on certain days, and I have to get the minimum cash out for points is you have to have 50 points or something like that, or I think it's Wells Fargo, you have to have $25 worth of points or something like that. Wait a second, this has gotten too difficult. Or it's 1%, or some of them are like, you get 1% cash back, but you only can do, it's only, I know Discover's, you get 1% cash back on your gasoline. I can't see. You get 1% cash back on your gasoline, but it's only good between the months of February and, I don't know, May or something. But when it comes October, you don't get 1% cash back on your gasoline for some reason. You only get 1% cash back on groceries, which is like, wait, this is too complicated. It's mental gymnastics. So the best thing is to do is just to stay away from them. So let's talk about the credit score. A lot of people are like, hey Tyler, you're the financial coach. Why do you say stay away from credit cards? So, because, hey Tyler, I need a credit score to buy a car and a credit score to get a house. No, those both are not true. The lie detector says that that's false. So, to get a car, you can actually, believe it or not, pay cash. You don't need a credit score. You can just give them cash, or you can borrow a friend's car, or you can do something like that, or buy a cheap car from somebody in cash. You don't have to have credit. Plus, when you do try to use financing for a car, then you have interest on that. So the interest rate, I think the lowest I've ever seen is 6%. I think the highest might have been 12 I've ever seen on a car loan. And so that's just extra money you have to pay on a car that you really didn't have money for in the first place. So let's avoid that. But no, you don't need there's a bunch of different ways around it. If you're really struggling, you can just become a one-car family. You can just figure it out. You can rent a U-Haul for 20 bucks a day if you need to get to work and back. That's a life hack right there for us. And by figure it out, just use critical thinking. Hey, I don't have a car. Well, what should I do? I could borrow one from a friend. I could carpool. I could ask somebody to take me to work. I could have my spouse drop me off at work and pick me up. What else? I can use a neighbor's car. I can, what else? I can get it. Nowadays, you can even get an Uber and Lyft. They can take you to work. So there's several different ways around it. Plus, there's always that drive. What I like to do is I'll drive around like I see this a lot. You drive around like a trailer park, and there's always cars for sale at trailer parks for some reason. Try that. You probably can get a good deal there. And who cares what the car looks like? If you need a car, just get a cash car. If it has dents, that's character. As long as the gas pedal works, the brake works, the tires are okay, the engine, it starts, that's all you need. So that's cars. So credit scores. Okay, I need a credit score to get a house. But Tyler, I need a credit score to get a house. No, you don't. So the lazy way of finding for a mortgage lender to find out if you qualify for a mortgage loan is for them to look at your credit score. And so let's stop for a second and let's break down what a credit score is. A credit score is a thing that was made by FICO, or that's the FICO score is what a credit score is. And that's really just made from 3 different companies. There's 3 different companies. There's Experian, there is Equifax, and there is TransUnion. And those people are the masters of the credit score, and they decide if you have a good credit score or not, based on certain factors. So what are these certain factors? Certain factors are really silly things that really don't make any sense. So some of the factors that create your credit score, or that make up your credit score. Certain factors that make up your credit score are things like, how much debt do you have? Whatever your debt limit is, let's say it's $10,000. How much of that $10,000 how much of that $10,000 are you currently using? I think it's something like debt limit ratio, something like that. That's one of the factors. If you're using a lot of that number, then that makes your credit score go down. There's a factor that's your debt history. So how long have you had credit cards? The longer you have credit cards, the better your credit score. Which is funny because another factor is how many accounts do you have of debt. So you could have a car loan, you could have credit card, and that's one of the factors. So I think if you have I think the sweet spot is around 8 accounts, 6 to 8 accounts, then you have a good credit score. If you have less than 6 accounts, that decreases your credit score. The funny thing is, when you open a new credit card to raise your credit card accounts number or total credit card accounts number, at the same time you are lowering the average amount of debt history, or you're lowering the average number of length of time that you've had credit cards. So that doesn't make any sense. So those two things are working against each other. Another factor is, are you using credit cards at all? I think the magic number is they want you to use 10% or less of your credit limit. If you're using more than that, that's a bad sign. If you're using less than 10%, that's a good sign. Which is funny because I have a credit, but you don't want me to use it. Whatever. I think there's another one. Let's see, what else is there? Credit factors. So there's history, there's usage amount, accounts, the number of accounts. Oh, of course there's, what do they call that? Collections. Shoot. There's a word for it when collectors, it sounds like derogatory, demographic. What's the word? Derogatory? Yeah, derogatory remarks about your credit. In plain English, that's, hey, have you had medical debt that you didn't pay back? Do you have anything in collections? Are you behind on your payments? Those are, I'm going to try to say it again, derogatory, that's not the word. But negative feedback from medical debt, credit cards, have you had things repoed and stuff? Derogatory marks, that's what I'm going to call it. That's going to be the name of this episode, derogatory credit score marks. Derogatory. But anyways, that kind of stuff is something that will affect your credit score. And of course, I think if you have, last time I checked, was it more than 2? Then that puts a negative effect on your credit score. So those are just some of the factors. I think there's maybe 1 or 2 more. And then some people say, well, when I pay stuff off, it gives me a negative mark on my credit score. My points go down on my credit score. I think it does sometimes, but it's such a silly math equation. Then maybe it goes down because you're not using your debt, which would affect your debt percentage usage. It would affect your accounts. So if you have a lower total amount of accounts, yes, your number would go down. And that could also affect your debt history length. So it might make your number go down, but really at the end of the day, what I'm saying is that you don't need a credit score at all. And we'll get back to what we were talking about, hey, Tyler, you need a credit score to get a house. So that is false. The lie detector says that is false. So to get a house, what you need is just basically income, a job, some paid utility bills, some previously paid utility bills, and this thing called manual underwriting. And not a lot of banks do it because it's difficult, and you can't just look at a number like a monkey. Manual underwriting is basically where the mortgage lender, he will look at your work history, say, hey, have you been at a job for 2 years or more? Hey, are you paying your utilities on time? Do you have money in your bank account? Do you have money in your savings? Just regular common sense questions anybody would look at when they're loaning money to someone. So that's called manual underwriting. I know a place called churchillmortgage.com. They do it. They can help you out with that. The only problem with the manual underwriting is that you can't have a bad credit score. You have to have a undeterminable credit score. And so what is an undeterminable credit score? I'm probably saying that wrong too. So that means that when they pull up your file on the credit score, they can't collect any data to make a number. So that would be like, say, if you closed all your accounts and you paid off all your debts and you have it's almost like having a 0 credit score. There's no data to reflect a number, so it's undeterminable. You have to have that for 6 months before you can do the manual underwriting. So there you go. But while you're waiting in that period of time for that 6 months, you might say, oh, but Tyler, I need to get a house soon. Well, you need a down payment, right? So after you close all your accounts, do some overtime, work your butt off, get a down payment of at least $10,000, and then go find you a house you can afford. So basically, you don't need a credit score to buy a house, and you don't need a credit score to rent a car, to buy a car. To rent a car, some people do want you to have a credit card, but there's a lot of places that will just take a debit card too, and they will take a chunk of money out of your savings. There's a word for it, where they hold money aside for in case they bring the car back in bad condition. They'll put a hold on your bank account of probably a couple $100. So before you go looking for rental cars, you want to call around and see who does that, if you're going to be traveling this year for Christmas or whatever. So I think that is all about the credit score right there. We talked about the credit factors. Let me give you some good, little bit of fun fact here. Fun fact of the day, please consider the following. The credit score was actually made in the 1980s or the late 1970s. So if you come at me and say, hey, Tyler, I need a credit score to get a car, or I need a credit score to get a house. Well, hey, what did they do before 1975? What did your grandma do? How did she get a house? How did they buy cars before 1975? Yeah, they did it with cash and manual underwriting. Go look it up. But the credit score didn't come out to the late 1970s. So before then, they just used cash and savings and manual underwriting to do things. So it is possible to get through life without a credit score. If you don't have a credit score, if you don't use credit cards and you don't use loans, put down in the comments, I want to know how long you have been without a credit score or without credit cards. If you have an undeterminable credit score, let me know how long you've had it in the comments. Show everybody else that it is possible. And even with renting an apartment, a lot of people say I need a credit score to rent an apartment, or I need for my car insurance. Now, there's a million companies out there to rent a house or get car insurance. You don't need a credit score to do that stuff. I should do an episode where I call car insurance people and see if that's true, and I'll call apartments to see if I need a credit score. There's a guy named George Campbell. He called a bunch of apartments, and he did not need a credit score for, I think it was roughly 4 out of 10 apartments didn't need a credit score. So, and let's say if you have a hard time with that, there's always an old lady somewhere that has a garage apartment or a house in the back that needs rented out, and she needs her yard mowed. So y'all can work together with that. Let's see, what else about credit cards? Especially if a credit card has an annual fee, what are you even doing with that? Just cancel that. What's the fastest way to pay off credit cards? There's this thing called the debt snowball. So the debt snowball is a real simple method of paying off debt. And the idea is, let's say you have a car payment and you have, let's say, 3 credit cards. Let's just stay with that scenario. That's pretty easy to go with. What the debt snowball method is, it's a system of paying off debt where you pay the smallest balance of debt first. You put all your extra money to that, all your overtime, every dollar from stuff you sold or extra jobs you put towards that smallest amount of debt. Let's say it's a credit card and the minimum balance, or the balance is $300. You make all your minimum payments to your car payment and all your credit cards, and then you put all the extra money on your smallest debt, which is at $300. And then you knock it out, right? And you'll do it pretty quickly, and that'll give you some motivation and some light at the end of the tunnel and some hope that you can pay off all your debt. So you take your minimum payment from that $300 credit card, plus now all the cash that you have from overtime and working extra and side hustles, and you put that towards your second highest debt. Let's say that one's $1,000. So now you can put that, whatever the minimum monthly payment, let's say it was $35. $35 is going to the second highest debt, or the second lowest debt, plus whatever you're normally paying to that second highest debt, plus all your overtime money and extra income. And it makes a snowball effect. If you can picture it, snowball is getting bigger and bigger as you're making more progress. And then eventually you'll have that second credit card paid off, or that second minimum, second lowest balance paid off. Then we go to attack the third credit card. Let's say it's $7,000, right? So it's all the same process. The minimum payment that was going towards the first smallest loan, or the first smallest debt, combined with the minimum payment from the second smallest debt, combined with all your extra time. That's a funny phrase. Extra time, overtime money, and your extra jobs, or your extra income, and put that to your third lowest debt. And again, it just makes a bigger snowball, a bigger debt snowball to pay off your debt. And then of course you just keep doing that and you'll knock it out. And you could this goes as fast as you want it to go. So you can work a lot extra, you can work extra time and knock all this debt out. It goes as fast as you want it to go. And so what happens is you build motivation and you build momentum because you're seeing these debts get paid off. It's very similar to losing weight. If you ever been on a diet and you're losing weight and you're like, well, I want to lose 5 pounds. And you look at the scale and you lost 5 pounds. You're like, oh, I can do this. And then you make some more changes and you lose another 5 pounds on your diet. If you go to the scale and you haven't lost any weight, or you've gained weight, you're like, oh man, and you lose all your motivation. That's a simple analogy, but it's very similar to losing weight. You just need that psychological motivation and momentum. Hey, I can do this. Hey, this is working. All the struggle and the effort and the sacrifice I'm doing, it was working. I'm going to keep pushing. So getting out of debt is a short period of sacrifice in exchange for a long-term period of success and peace of mind, financial peace of mind. Just like losing weight. Let's go back to that analogy. Maybe you're not eating what you want to eat. Maybe you're eating some foods that don't taste that great. Maybe you're working out a little bit more. You change your diet. You're doing a temporary sacrifice in order to change your body so you can have a long-term period of happiness with how your body looks. Or maybe you're feeling healthier, or you want to be healthier. In the financial world, I call that being wealthier, because you're making a short-term sacrifice, paying off your debt, working really hard, grinding in order to become wealthier for the long term. I hope that makes sense. What else? Let's talk about credit cards. What else do we have? Credit cards. Don't mess around with payday lenders. Those guys, I heard they charge a really high rate. So the reason I don't like credit cards and payday loans and payday lenders and student loans and stuff like that is because you have to pay these people back. You're already in a tight spot. Let's say you have a car repair or a medical expense or a home repair, the water heater went out or something. So the idea with borrowing money from somebody else to pay for something that you didn't have money saved for already, and then so you have to pay them back money, but then you also have to pay them back more money than you took from them, and you're in a situation where you didn't have any money in the first place, and now these people or this company or the borrowee, they want you to give them back more money than you took from them when you didn't even have money in the first place. How crazy is that? So the thing about spending money, and really the way to get out of debt, is to get on a budget. At the beginning of the month, make a budget. Everybody knows about how much they make every week or every 2 weeks, what their paychecks look like on average. You take that number, put it together. If you're single, you combine that number, and then you get a piece of paper, you put your income total for the month, all your expenses, income minus expenses, minus debts and wants, and then you see what number that is at the bottom. That's a budget. If you have a spouse, you take your combined incomes together, minus your combined expenses, minus your combined debts and wants, and that equals whatever that number is. Hopefully it's positive. It could be negative, it could be zero, and that's how a budget works. And we can talk more about that in another episode, but that's basically a budget. It's not difficult. A budget gives you freedom to spend because you don't have to worry if you don't have any money in your account. I was watching TikTok earlier today, and this lady was talking about, hey, does nobody have any money? Is everybody just pretending that they don't have any money, or they do, pretending that they do have money? She was mentioning that she's a barista and she works at Starbucks, and people will come in there and they swipe their card and they say, hey, I want a coffee, and it's gonna be $6 or $7. And then I think that particular day that she made this TikTok video, she said that she had to tell, it was a large number of people, it was a quarter of the amount of people that came in. She had to tell them, hey, sorry, your card was declined, there was insufficient funds or something. Do you have another card that you'd like to use? And about a quarter of the people said, no, I don't have another card I'd like to use, never mind. And then they just walked out. But it happened so much that day, it was eye-opening, because people just are not paying attention. They just come in there, hope they have money on their card, swipe the card to buy something that they don't even know if they have money for, and then when they don't have money, they just walk out and leave. How wild is that? Are people really living like this? Yes, unfortunately they are. The answer is yes. So there was research done that about 7 out of 10 people don't live on a written budget. The thing about doing a budget is it's a grown-up thing. You have to pay attention to your money, or your money will leave you. There's plenty of companies out there, businesses, that they will gladly take your money if you are not paying attention to it. We pay for so much stuff nowadays: subscriptions, Starbucks, overspending on groceries, going out to eat, kids' sports activities, school pictures, stops by the gas station. What else? Leaving the comments is something that you spend money on that you're not really proud of, but it takes your money. It's like an impulse buy. Impulse buys at the register, all the candy and the sodas sitting there. How many people do that? Going out to lunch every day, like, oh, I'm just gonna buy something for $5. Nothing's really $5 anymore. What are you gonna buy? A Whopper Juniors? How much is that? Fries are $3. A large fry is $5 by itself. Come on. So to get out of debt and to get on a budget, you really have to just control your spending, and you have to be a grown-up, and you can't do childish spending. Children do what feels good. Grown-ups devise a plan and follow it. So we'll get into budgeting another day, but that's the basics of budgeting. Write down your income. Everybody knows about how much they make every month. Write it down, minus your expenses. And speaking of budgeting, when you do write all this down on paper, your income minus your spending, you're going to look at your numbers, and I call it the result. Your expenses minus your income. Whatever that number is going to be, I call it the result. It's a positive number, a negative number, or a zero. You're going to see that, and I bet that number at the bottom, the result, I bet that's going to be a positive number. And you're going to tell yourself, where have I been putting all my money? Why is this number positive? This number's positive, yet for the past 6 months, I haven't had any extra money. I've had to borrow from friends, or borrow from friends, or use my credit cards. Where's all this money going? So just sit down and do a budget one day. You and your spouse sit down and do that, and find out where all your money's going. You're probably going to be disgusted with yourself, but at the same time, it's like you're giving yourself a raise, because you are finding out, hey, I did have extra money. Now I just have to be disciplined. And actually do a budget and follow it. And a reminder, you're in charge of your budget. So you make the plan of your expenses, and then all you have to do is follow it throughout the month for the next 30 days. Pretty simple. So your budget's not really restricting, or it's not taking all the fun out. You can make lines for fun: clothing, hair, nails, Starbucks. You can make budget lines for all that stuff. You're in charge of it. Just what I want you to do is I want you to do it intentionally. Spend your money intentionally. Don't let your money disappear like a leaky bucket, because it will disappear, because there's lots of companies out there and people trying to take your money, and they know how to do it. They know all the simple ways to easily take your money when people are not paying attention to their budget and they're careless. So don't get taken advantage of. Spend intentionally. Alright guys, so I guess that's it for this episode. If you are looking for other money tips, check out BecomeDebtZero.com. If you like a free monthly budget template, you can check out BecomeDebtZero.com/free stuff. You can also check out the community page at Facebook. Go to Facebook and check out my community page. It's called Money Mountain. That is a community page for Become Debt Zero followers. You can ask questions there, answer other people's questions. You can post what you want. Mostly it's a page of fun financial memes. And on Fridays we post side hustles, so you can promote your own side business. You can also jump on Become Debt Zero on Facebook, and you can get helpful and humorous information every day about finances, so you can get ahead with your money. I also offer a few things like personal budgeting. I have a personal 30-day budget challenge, or a 30-day spending challenge that I offer. Let me know if you're interested in that. My email is BecomeDebtZero@gmail.com, or you can reach out to me at my phone number 682-231-8789. Again, you can reach me for personal finance coaching, financial education, and debt elimination at my phone number 682-231-8789. You can call or text me there and leave a message. If you also offer quick personal financial coaching suggestions, I also offer that. Just a quick one-page suggestion list. So it's personally tailored to your specific needs and situation. And let's see, I also offer a 30-day video course that you can do at your own pace. You can check that out on Patreon. Just search Wealth and Wisdom Workshop. Again, that's an online video course. You can do it on your own time. It's up to 30 days. It's only $11.99 right now. Check that out at patreon.com and search Wealth and Wisdom Workshop. And that's 5 debt crushing videos. Again, you can do it at your own pace, and once you purchase that, you also get my 6 financial organization templates, things like the debt snowball, the monthly budget template. You get a couple debt organization templates, and even some fun savings charts, so you can save your $1,000 starter fund. Again, this is Tyler Temple. I'm your favorite financial coach, helping you save money, get on a budget, and get rid of debt. I teach financial education and debt elimination. Get more info at BecomeDebtZero.com. You can find me on TikTok and Instagram. Again, website is BecomeDebtZero.com. You can find a lot of cool calculators there. And if you'd like to hear something on this podcast, a certain topic you want to hear, something that might make this more helpful and humorous, or a question you've had that you want to know about, leave a comment below. I will be happy to go over that on the next podcast. Please share this podcast with somebody that is interested in financing or finances, or that needs help with their financial situation. What else? So I guess that's going to be all for this episode of Talk Me Out of Debt Traffic Edition podcast. Leave me a 5-star review and hit all the buttons. Share this with a friend that would be interested in money talk. And what else? I guess that's about it. But keep in mind, it's not how much money you make, it's how you spend it. All right, spenders and savers, I'll see you next time. Thanks for joining me.